Hello everyone, this is Greg here, and today let's look at SMCI. So super microcomputer has suddenly become one of the hottest AI names in the market again. And if you only look at the stock price, it's quite bullish. Just a few weeks ago, SMCI was trading under heavy pressure. The stock has been dealing with concerns over margins, customer delays, execution, and a long list of other issues that had caused investors to worry and to question whether Supermicro could actually convert this AI boom into something profitable, consistently profitable. Then the story changed quite recently and quite quickly. Supermicro first surprised the market with a major improvement in its margin outlook. Let's look at some of the details here. So previously, the company had expected gross margins of about 8%, only 8%, but the recent results suggested margins could come in between 15 and 17%. That's quite a huge difference. And when the final numbers came out, gross margin actually reached 17.5%, compared with only 9.9% in the previous quarter. So that's very impressive. So that immediately addressed one of the biggest concerns that investors had around SMCI, because Supermicro's problem was never really a lack of demand. We know the demand is there. AI infrastructure demand has been enormous in the last few years. So the problem was whether the company could turn that demand into profits without sacrificing too much margin in the process. And as you can see here, suddenly investors received evidence that maybe it could. For example, in the fourth quarter here, Supermicro generated approximately 11.1 billion in revenue, as you can see it here, almost double the 5.8 billion it generated during the same quarter just a year earlier. So revenue did come in slightly below Wall Street expectation, but that is partially due to shortfall to customer delays involving power, cooling, and networking infrastructure. In other words, the demand didn't necessarily disappear. Some of the revenue simply got pushed out, and then the management gave Wall Street something even more important, the forward outlook. So for fiscal 2027, Supermicro is now forecasting approximately 85 billion to 72 billion in revenue. Quite impressive. Wall Street's expectation was only about 52.5-ish billion. So as you can see, that's quite a huge beat. That explains the huge rise we have been experiencing in the last few days, weeks. And management also talked about more than 60 billion in new orders in 2027. So yeah, that explains the higher rise in the stock. And something very interesting has been happening in the options market. As you can see here in the news, call volume surges and implied volatility hits 82.6%. That's very high for the stock. And also you can see it in so more than 750,000-ish contracts traded. That's a lot for one session, and it's mostly the call volume rising, outnumbering put volume by almost 4-1. So a lot of bullish bet here, and it's mainly 82.6% is quite high. So for a while there, the options market tends to agree with the chart that we're seeing earlier. Stock is breaking out. Earnings story is amazing. Margins recovered. Management issued aggressive revenue guidance. So call activity exploded. Yeah, everything seems to be matching up. Everything seems to be consistent in the same direction. But actually, that's just the tip of the iceberg. And this is where we come in. when we dive deeper into the options chain, you actually see mixed signals here, and we'll go into the positions soon here. Despite the huge volume going into the call side, we're actually also picking up a huge volume in the put side. So what we're seeing in the options chains and in the news is just the tip of the iceberg. There's also a lot of bearish activity happening on the put side, and we're going to take a look at those positions and see what's actually happening here. And in the last few days, actually, the implied volatility has slightly dropped a little bit, and this bearish position and volume that we're seeing, it just happened in the last few days. So let's look at the positions here. As usual, let's start with the call side. So this is definitely bullish. 1,479 vertical position, betting that the price will go above 40 in the coming weeks. Now, yeah, this actually, this one is bearish. This one is a strong bullish position. This one is bullish as well. Yeah, so these bullish positions are consistent with what we're seeing and in the market, how the stock has been behaving in the last few days, weeks. But this one is more interesting. This one is actually a bearish position, betting that the price will not go above 42 in the coming weeks. Huge position here, essentially placing a cap on the stock. So this will be your resistance here, no doubt. Somebody is betting big that even if the price continues to rise in a couple of weeks, it will not go above 42. Let's continue with the other positions. Okay, same one. Okay, this one is also bullish, consistent with the market. Now let's look at the put side. And today, as usual, we're mainly going to look at the vertical positions, the spread positions, and the single positions. Okay, so this one is bearish. Yep, this is one of the bigger bearish positions that our system has picked out. 1,643 contracts betting that the price will go below $32 and potentially going past 27. Now, keep in mind that this is there's a high chance that this is just a hedge position for a bigger long position, as a lot of the firms carry huge stock positions of these tickers. They will also buy hedge during volatile times. Okay, so this is a huge bearish position, betting that the stock will go below $34, potentially passing 30 within a week. Sorry, within a few weeks. Let's continue. Wow, okay, even bigger bearish position. So these are a lot of the interesting big bearish positions that our system has picked out. Also contributing to the rise in implied volatility in the last few days or weeks. Again, it could be a hedge position, but so right now we're already seeing a story here. Stock has been rising aggressively in the last few days, few weeks, and right now when things are quieting down a little bit, now we're starting to see influx of bearish position, and these are huge positions. In fact, I think the in the options market, we're leaning closer towards the put side, the bearish side. Again, it could be a mixture of hedging positions during volatile times, hedging to protect the bigger long positions, but clearly very bearish. . 。 . 。 . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . Okay, so that's a bullish position, betting that the price will not drop below 30 within the next few weeks. Yeah, so we're seeing mixed signals here, but certainly it's becoming to look more concerning for the stock compared to a few weeks ago when we had there's a heavy imbalance leaning towards the call side a while back, but now we're seeing heavier or bigger mixture, leaning heavier towards the put side right now. Yeah, look at these positions. It's crazy. All right, let's look at the single positions right here. That could sometimes tell us a more clearer picture. Okay, right here we have a bearish position. Well, at least this trader here or institution is betting that the price will not go above 55 within in the next few weeks. Now that's quite out of the money. So yeah. So this is a covered call position. Somebody is just betting that the price will either stay flat, maybe drop a little, maybe rise a little, but will not pass 55 in the next few weeks. So that could be your resistance. And let's continue to the next position. This one is a very bullish position. So yeah, we're still seeing a lot of bullish position, no doubt about that, but we're certainly seeing more caution as well, more bearish or hedging activity on the other side. Yep, this is very strong bullish position. So yeah, if you're planning on placing a bet on SMCI, betting that it will continue to rise in the following weeks, just be careful. Just be aware that a lot of institutions are starting to hedge or go bearish after a strong rise for the past few days, weeks. Yeah, certainly there's caution. This is a bearish position, betting that the price will drop below 30 in the coming weeks, or hedging against a larger position. This one as well. Yep, just like the vertical positions, this is a huge bearish position. So yeah, I would be very careful. And if you're not sure about about this ticker, just stay out of it for now. Wow, look at this position. Yeah, this is a very bearish position. Somebody with insider information might be betting that the price will drop in the coming weeks. Or hedge, we never know. But honestly, this is quite close to the money to be a hedge. Somebody's paying a huge premium for that, and don't forget that implied volatility has been very high, so this is a very expensive position for just hedging. So yeah, this just might be a directional bet that the price will drop, but don't forget about the other bullish position we have on the other side. So yeah, just be very careful if you plan on trading this ticker. Yep, this one as well. Yeah, huge bearish positions. And that's why I wanted to show you these positions, because just by looking at the news or looking at the options chain, implied volatility, you might not be able to gauge exactly what's happening in more depth. But seeing some of these bigger, unique positions, it tells us what some of the bigger players are doing. And again, these positions, it's not showing all of the contracts available, just a few of the more bigger, unique positions that our algorithm has picked out. But that's enough to tell a story that there's conflict in the market right now. Okay, yeah, this one is likely a hedge, just protecting against a bigger long position. But yeah, there you go. Just wanted to show you these strategies and positions out there. Thank you for watching. If you find this information helpful, please leave it in the comment section. If you have any feedbacks, please leave it in the comment section. And I will see you next time. Thank you very much for watching.